Now, the Ugandan President Yoweri Museveni says that proceeds from the country's oil sector will only be used to develop key sectors of the economy, and they will not be used to fund recurrent expenditure. Now, the revenue will be used to boost electricity access, agriculture and even education. Here's Michael Baleke with more.
Uganda's President Yoweri Museveni says the newly discovered petroleum resources will be integrated into the economy. According to Mr. Museveni, proceeds from the sector will be deposited in a fund to boost Uganda's production, build infrastructure, and develop local human resource.
So we are going to get quick money from those people, those automobile users, aircraft people users, and we use the money to build a durable economy for Uganda. We shall use the finite resources to build the durable capacity of our economy.
President Museveni says oil money will also be used to fund science and innovation, as well as irrigation for agriculture. Uganda first discovered crude oil in 2006 in the Albertine Rift Basin along the country's border with the Democratic Republic of Congo. It estimates reserves at 6.5 billion barrels, with between 1.4 billion and 1.7 billion barrels recoverable. And the International Oil and Gas Summit, taking place in Kampala, hopes to attract investors to take part in the development of the resource.
For crude to be produced in 2020, the pipeline must be ready to deliver the crude to the international market. The refinery must be ready to receive the crude which is being produced. And so we are pursuing both these projects in a fast-track mode.
Uganda expects to identify a lead investor for the $4 billion refinery by February 2017, after two previous attempts collapsed earlier this year. Some of the oil will be pumped to Tanzania's Tanga port through the pipeline, whose construction plans are underway. Uganda is looking at 2020 as the year for the country to become a middle-income state, with more than 160,000 jobs created once oil starts flowing. And the process for oil to flow will require an investment worth $8 billion of oil-related infrastructure that includes drilling of wells, construction of central processing facilities, and feeder pipelines, among others. Michael Baleke, CCTV, Kampala, Uganda.
Let's dig deep into Uganda's oil story. I'm now joined by Dickens Kamugisha. He's the CEO of the African Centre for Energy Governance. Is live in Kampala tonight. Mr. Kamugisha, thank you very much for your time this evening. Let's start with this refinery business. Efforts to find a lead investor for this $4 billion facility have failed twice. The Koreans pulled out, the Russians pulled out. I mean, this should be a fairly straightforward process. What's going wrong?
Yeah, thank you, Rama. I think for Uganda's development of the oil sector, there are a number of factors that are happening. I think first and foremost, the government and the companies that have been investing in the sector to explore and discover the oil. We haven't seen really the two parties, the companies and the government, coming to an agreement that actually this is the best development option for Uganda, and this is how we are going to fund it. And this is what we want to produce from the refinery. So as a result, you see the big companies like Sinok, like Total, that you would expect to be interested in funding the refinery, are really not actually bothered in the refinery. Instead, the smaller companies that, for the interests that we really don't know as citizens, they are the ones who are applying and who were selected to build the refinery. And perhaps that's the reason why those smaller companies were not able to continue and build. We spent the whole year negotiating with the RT resources, global resources from Russia. We didn't succeed. Now the government is saying we are going to ask for bids from more companies. So we hope this time we are going to get it right. But there is a need for agreement between the big companies and the government to be able to have a credible investor who can ensure that our refinery succeeds.
Right. Let's talk about the funding side of things. Last week, Moody's downgraded Uganda from B1 to B2, and among other things, they said they were concerned about Uganda's debt service costs. Now, those are going to be rising from 11% of government revenue in 2015 to almost 16% of revenues in 2018. Now, between a weaker currency and higher debt service costs, is that 2020 commercial oil output target still viable?
Yeah, again, of course, these are the challenges that we are facing as a country. About a year ago, the permanent secretary, Minister of Finance, was actually telling the government that if we continue and put money in this big infrastructure, considering the debt levels today, we are likely to actually run bankrupt as a country. So it is also, I think, a decision that must be made by the government where we want to invest in the medium and long term. Because if we invest all the money that we are borrowing in long-term infrastructure and we ignore the short-term and medium terms, I think we are likely to face challenges. Recently, there is a report by the World Bank that everywhere, most of these projects where the government invests money, where you invest $2, you end up getting $1 or $1.50 in return. So it means that actually either we are investing.
Oh dear, it does seem that that link, of course, has had a bit of a problem. We do apologise for that. That, of course, was Dickens Kamugisha, the CEO of the African Centre for Energy Governance. He was live in Kampala.